Should property investors panic about the huge increase in interest rates? So many property investors will freeze because they're panicking intellectually because the media is selling newspapers telling them that interest rates are shooting up. My name's Paul Smith from Redmayne Smith, and I've been a property investor now for a little over 40 years. Bought my first property in London in 1982. And during those times, I've seen interest rates all over the place. My first mortgage interest rate was 16%, 269A Roman Road. I paid £9,000 for it. I spent a couple of £1,000s, DIY, and obviously a pound then was worth a lot more than a pound now. And I sold it 2 years later for £33,000. See, perversely, what many investors don't appreciate because they haven't been in the game long enough is that the higher the interest rate is, it's normally to try and control inflation. So if inflation's high, interest rates go high, and what that means is the price of everything goes up, which is great because the price of your property goes up. But I want to look beyond the figures, and I want to explain to you why I, as a property investor, I'm quite happy to carry on buying properties and ever more properties, and why I don't invest my money in a number of other asset classes. Let's have a look at this chart here of investing £100 in the FTSE, the London Stock Exchange. That value of that money 7 years later, by the end of 2022, will be round about £145. So you would have made a profit on your initial £100 investment of roughly £45. So if you took the same amount of money and you invested it in buy-to-let property, and you added together the capital growth and the rental profit, that same £100 would have returned you over the same time period about £180. But here's where it gets crazy. Let's say you're going to put £1 million into the stock market. You can't leverage it. You can't take a mortgage on it. Even if you want to go and buy stocks and shares in Barclays Bank will give you zero loan against it. If you take £1 million to Barclays and say, well, actually, I want to buy £4 million worth of buy-to-lets, your £1 million of your equity, your money, they will give you £3 million as a mortgage, no bother at all. As soon as you're talking about property, you can typically get a 75% of the cost of that property as a mortgage. In 2022, in the UK, there were 8 interest rate rises, 5 housing ministers, 3 prime ministers, and 4 chancellors. And on top of that, we had a fuel crisis, a post-pandemic slump, and raging inflation. How about that for 2022? And in 2022, the average price of the average house went up by 10%. The average salary in the UK at the moment is round about £36,000. Now, if we go back to 2003, 2004 on this chart, you'll see that the average house price in the UK, so the UK is the blue line, you'll see that average affordability has gone up from, times 5 to about times 6, times 7. So it's gone up a bit. But look at the red line. The red line is London. If you've heard me speak before, you'll know that I don't really think London is part of the UK property market. It's a global city, and many properties in London are bought by foreign nationals or expats or companies or whatever, so they artificially force the price up. But now look at the green line. Now on this chart, it says the North. It doesn't really mean the North, literally. It just means not London. The affordability way back in 2003 was about 5 times, roughly, salary. And now it's actually gone down. You see, it went down to 3, now it's back up to about 4, roughly. The average salary is £35,000. Times 4 means £140,000. In many parts of the UK, you can get a perfectly acceptable starter home or whatever, maybe even a second home for £140,000, £150,000. Look at this indicator, and always look at this indicator for the area where you're going to buy. So what that tells me, big red flashing light, don't buy in London. This is the percentage of the average person's take-home pay that they spend on their mortgage. You'll see on this chart that the long-term average is around about 30%, which is where we are now. But it spiked close to 50% in the early 90s, and it spiked above 40% 2008, before the global recession. If you're hitting percentage of your paycheck going into the mortgage bill of 40 and 50%, that's normally when you get a correction. More than twice as many people are having to rent privately. Why? Well, because all the social housing has been sold off. Mrs. Thatcher and subsequent governments sold off all of the council houses and stuff. That's what created the entire buy-to-let sector, really. Let's think about maybe your mortgage interest rate goes up by 1%. From 3% to 4%, something like that. Can I afford it? Well, yeah, because in 2022, the average increase in rent in the average part of the UK, wherever that is 10.8%. If you've got a 1% increase in the money you've got to pay the bank, but you've got a 10% increase in the amount of rent that you're going to get, why do you care? Never ever focus on just one thing. So many people are obsessed by just mortgage interest rates. How about a little sneak peek at what some real experts think is going to happen next year? RICS is the Royal Institute of Chartered Surveyors. RICS just published a report that says in 2023, they anticipate that rents, having gone up by 10% last year, could go up by as much as 15%. Why? Lack of supply, excess demand. Population's going up, we're not building enough houses. It's a major opportunity to fill your boots. I hope that's reassured you with regard to should you invest in property, why do property prices keep going up, and you'll see from the data, I love my facts and figures, and that's the way that Redmayne operates. If you would like to take an opportunity to talk to one of our advisors, professional investment advisors at Redmayne Smith, somewhere around this video there's going to be a link. Click on the link and book an appointment. This is for people that have got minimum of £40,000 in cash. So if that's you, we would absolutely love to talk to you. If that's not you, relax. That was me at the age of 17. I left home at the age of 17 with £170 in my pocket. At the age of 18, I had nearly £10,000. I bought my first flat, and the rest is history. Hope you found this video interesting. Once again, my name is Paul Smith from Redmayne Smith. Let us know if we can help you. Bye-bye for now.